Marcus Crowick is a business coach, profit-first professional, and entrepreneur with over 40 years of experience helping business owners take control of their finances and build profitable, stress-free businesses. In this podcast, you'll get real-world strategies and practical insights to grow, increase profits, and create financial stability. Whether you're a tradie, a startup, or an established entrepreneur, Marcus's straightforward approach will help you build a thriving business. This is Business Unlocked.
G'day and welcome. In today's episode, I'm going to give you 5 actions that you can take to increase your profit and put cash in the bank today. I apologize for my voice. I'm just getting over the flu and a sore throat. Please bear with me for the episode. Last week, we talked about the 5 drivers of profitability in your business. And they were generating leads, converting them into customers, average dollar sale, the number of transactions, the repeat business that you generated, and the margin that you got from the revenue that you created in order to create your ultimate profitability. Well, today we're working on margin, which I said was the number one thing that you have to work on. It's the number one because you need to get that profitable model in place in your business. And what that means is you have to know that you're making money on what you do before you go and grow it. I see time and time again where people think they're making money because of their profit and loss report. They look at the number and it says down there that there's a profit and the accountant tells them that they've got a good business. But what they find out later on is, in fact, they're cash flow negative. It's not working well. So today we're going to work on the margin and, again, strategies that you can put in place today to make that profit grow and put cash in your bank. Stay tuned for that last strategy. I've got a giveaway for you and some insights into what's going to make it work for you and why you should be having a look at it. So let's get going with that first action that you can take, strategy that you can put in place. When I first start dealing with people, even if they're saying they want to grow, I do go back and have a look at, well, how are things working now? What's actually the profitability of this business? What's going on? And the first thing I look for is, how much money are they owed? So if you've got your business running out there, you can go now and have a look at how much money you're owed. And this is the first place for us to start, because if you're owed money, we need to go and collect that money, particularly money that's overdue. So we know that in a lot of businesses, you're going to collect money at the time, but, things slip through the cracks. In other businesses, you're actually giving invoices out with terms that allow people to pay, whether it's 7 days, 30 days, 60 days, depends on the business and the people that you're dealing with. So we want to collect that overdue money. So we do a thing in the financials called aged receivables, which is showing you, here's the lot that's due at the moment, here's the lot that's 30 days overdue, 60 days overdue, and whatever. But here's the thing with that. If people are, owing you money for a substantial period of time, like past your terms, let's say even you're at 30 days and they're at 60 days that they're owing you money, they've made a decision not to pay you. Now, we don't know what that decision's about at the moment until we inquire. So yes, talk to them about what's going on and go after them. It's not meant to be a horrible chase for these people, but have a conversation with them and keep it conversational. One of the great things you can do in the book, How to Win Friends and Influence People by Dale Carnegie, one of my big takeaways from that book was ask people for help. They like to give you help. And psychology's proved that over and over to us, that if you give people a reason, then they're looking to help you. So have a conversation with them. It doesn't have to be harsh, depending on who you're dealing with. And just, would you be able to help me, and tell them something about your cash flow? That could be as simple as you're looking to sort out your cash flow for the coming weeks and just wondering whether that invoice was going to be paid, when it was going to be paid. Along those lines, we've got a far more rigorous process we put in place, but you get the idea, which is go after those. But here's the secret when it comes to that. I always say to people, you need to have a look at what's just overdue or just coming up. Now, interesting, one of my clients that I'm deep in the financials with, we actually handle some of the management for them. They do get email reminders from people about your bill is coming up. Could you tell us if you're going to pay it? Well, there's actually one very big company that does that to them. My thing has always been, If it's just gone overdue with your customers, give them a call and again, just have that conversation with them. Because at this stage, let's say you've given them 7 days to pay and they're 3 days late, I consider it as they haven't made a decision not to pay you. They just haven't paid you. That might be because it doesn't fit in their system, simple as that. Their system meaning they have times when they do it, which is one of the things that I suggest, times when they pay their bill. Maybe it's not up to that time. They might have just overlooked it, or they are waiting for the money to come in. So it's a mild decision, but it's not a, well, I'm not going to pay you type decision. So give those people a call and have a chat to them. Look, I've done this with clients where we've set a target, and I really like doing that. One of the clients was $100,000 in 10 days. And because we set that target, they put it on the wall in front of them. They made the calls. They got the money. And that was a multi-million-dollar business, so they had a fair bit outstanding, and that was perfectly okay. Again, the message is simply talk to the people that owe you money, but especially those that are just overdue. The next thing that we want to do is have a look at your invoicing. Now, are all your invoices up to date? And that's as simple as having a look at the work that you've done and seeing, have you taken the time to stop and invoice? So this is along the same mentality that I have here as going out and doing more work, but you haven't collected the money you're owed and you haven't invoiced for the work that you've done. Now, I see, again, that all the time. You'll see that in the book, which we'll talk about later, but that idea of I'm running out of money, so I've got to go and do more work. I've got to go and find more work. The attitude's wrong there because you're actually acting like a worker, an employee, rather than the thinking that a CEO would take in this situation. And it's one of the big things we've got to do is move through the thinking that takes place, how we think about business and how we think about your role in the business, our role as leaders of the business. So the idea here is stop. Just stop and go and collect the money for the work that you've done. That's the most profitable thing that you can do today. All of that money that you're owed is coming straight off your bottom line. So when that money comes in a way, it goes straight to the profitability of the bottom line of the business and definitely to the profitability of the business. If you're not doing that, you get into what I call a cash flow tidal wave, which is just constantly having to grow because you're chasing bills in order to pay what's coming in. That might make some sense or not. I'll explain that again in later podcasts and videos. But stop and go and put these actions in place, please. The next one we're going to talk about is a bit along the same lines, but I've worked with many people, and when we've had a look at, well, what are we going to invoice? And we're looking at, well, what have you done that you can invoice? That's all very well, but what we come up with is this, idea of the work in progress. Now, the work in progress is, and they might be saying, well, I can't bill that. What people find when they go back, so again, I've got lots of examples of this, like a landscaper that had work, but there might have just been a little bit to do or a bit of rework to do. So they were letting those jobs go a bit because then they had their new jobs to go and work on at the same time. But what they were finding was that the jobs that they'd left were mounting up and they just needed that little bit to invoice for the final payment. And sometimes, a lot of time, that little bit that had to be done was really minor in comparison to the final payment that they were going to receive, particularly because when I started working with them, they didn't necessarily have great terms and conditions in place. So the final payment could have been quite substantial. I really like to work with people. Like one kitchen company I worked with, it was only 10% left when we actually delivered and installed the product. So it was very minor what was left to pay, meaning that obviously it's not minor because it could be the profitability if you're running a 10% profitable business. But it meant that if something went wrong, they weren't going to lose out on materials and labour and those sorts of things. They'd at least all been paid for. So think about this. What's the work in progress in the business? Meaning, what are the things that you can just go and finish up on? Maybe there's a few hours work, a half a day's work, 1 day's work. can get them out of the way and collect those final payments. And because they're not normally, you don't have a week to go, it is shorter periods, hopefully, by putting importance on doing that, the priority, you have a few of those happen at once. So you get some good sums of money coming in all in one go. Now, as I have been mentioning that, these things are all from experience for me. They're not just theory out of a book or that I've heard from someone. They're things that I've seen working with clients over the years. And there's some real stories, what I'm telling you, like about landscapers, if I mention mechanics, electricians, whatever it happens to be. They're all real stories, and you can find all of those. I'm very proud in my book, The Tradie's Guide to Instant Cash Flow. So that's got a whole, list of these strategies in order about what you can put in place to, as it says, get instant cash flow in your business. You can go and find it on Amazon, or we'll have an email at the end, success@businessunlock.com.au if you'd like to order it directly from me. It can work out a little bit cheaper, but all the stories are in there. The main reason for saying this is not to promote the book, because it's not like I make a fortune out of the book, I promise you. It's really, you can get the strategies with the stories that go with them so that you understand the experience that's gone into it from the client's point of view, not just my point of view, and lots of other anecdotes of what people have done and how they've been thinking about it to get them through some of these strategies. Now, the next one that comes up is about your terms and conditions, because they're a really important part to get in place early, and there's some simple things you can do with terms and conditions to make them work for you. Number one is the idea that you want to get paid as quickly as you can. So you need to have terms that work in your industry. In one of my businesses, which was importing commercial touchscreens and fabricating metal kiosks in Australia, we dealt with some of the big franchises in Australia and supplying them and digital screens on walls. So just to let you know that, again, it's not just theory, it's from experience. If we were dealing with mines, to get their business, we had to give them 90-day terms. It didn't matter what we wrote in a contract. They were the ones who were dictating to us what that was going to look like. And the same with some of these major franchises. It wasn't a matter of, you need to pay us now. They do things like pay deposits. And it's about this, when you're getting the order, that what we want to do is pick up a deposit at the same time. Deposits are, in some ways, the lifeblood. You're getting money before you do it. Now, this is really important, and you'll see this in some industries anyway. It's really important if you've got to go and buy goods. So in some industries, you might get a deposit to start the job, the 10%, whatever the maximum is in your state, your industry, the 10% is the deposit to kick the job off. And then you might have a materials charge in along the way. Collect as much as you can, as upfront as you can. And it is going to change the way that your cash flow works by doing this. I did this with a signage manufacturer. They said to me it transformed their business because they were then collecting 50% before they went ahead with anything. So you want to order the job 50%. We do that in T-shirts. Custom ones in my daughter's business, they're all paid for up front, just like Dell computers, if anyone's old enough to remember them. And we do lots of things like that. We buy from Amazon, paid up front. So custom hoodies and things paid up front. If it's a bulkier order, 50% paid up front, and that would be like for business shirts. The signage people did that. If it was most of their orders, it was 50% up front to start the job. Anything under $500, paid up front. I did this in one of my businesses years ago where I was allowing people to pay week by week. And then it was when I was first coached and we put in place that people had to pay up front. Instead of waiting for money to come in for bills that were there, what it did for me was meant the money was there for the bills that were going to come in. So it twisted those things around, but it felt like a 2-month change in the way that money worked. So it made a really, really big difference to, stress levels for one, as well as cash in the bank, because then the money was going to be there to pay for these things. So terms and conditions, but number one, put some deposits in place. Make sure you take whatever deposit you can and get that up front. I normally work with clients, people get worried about But how do I do that? How to put that in place? We work that through so that it's no problem. And people nowadays are no problem. If it's not working for you, if people have a problem with it, they're probably not the right client for you. And I'll tell you, taking on a job that fails, you've got to do, in a simple version of this, you've got to do 10 times the amount of work just to pay for that job that failed, that you didn't make the money on, that cost you the money. And you're not making any money out of the 10 times the work that you're doing. Does that make sense? You do a job for a day, assuming that a business has a 10% profit, they're making 10% on the day, so they're doing $1,000 worth of work, and out of all that, once they pay all their expenses and whatever, they're left with 10%. If something goes wrong on that, so let's say they go back the next day and do a second day's work, they only budgeted for one day, but now they've used 2 lots of expenses and they haven't made a profit on the second day. On the third day, when you go to another job and make 10% profit, that 10% profit is going towards paying for day 2 when you didn't make any money. And you've got to do that for the next 9 days just to pay for all the expenses on day 2. Again, simplified version. Don't argue with me about how that works. Simplified version to show you can't afford to do bad jobs. We're going to come to more about that. That's not for today. Take deposits, put that cash in your bank, please. And the last one for today is about your pricing, increasing your prices. Now, look, a lot of gurus stand on stage and say, just go home and increase your price by 10% and you'll be amazed at the difference. Now, I haven't seen anyone where that's really worked badly, but I can't in all good faith say to you, just go and do that, because it's not advice from me. I've got to give you, here's the theoretical, like all the accountants and financial planners say, it's the listen to me, but bear in mind, I can't guarantee those results. It is really theory. You've got to make the decision to put it in place. The reason it works for so many people is, number one, the marketplace will withstand a small increase in price. And a lot of the time, 10% can be a small increase in price. So even your mechanic who might be charging $120 an hour at the moment, if they put that up to $132 an hour, when you go in and get a 2-hour service, so we've increased it now by $24, your overall cost, but there's been oil and all that stuff in this. I'm just talking about the labour price at the moment. You're probably not going to really notice that, whether it's, $370 or $394, you get me, with just increasing the labour price. It's not out of the ballpark for your mind, because you're probably thinking it's going to be about $400 anyway, or $350, $400. You cope with it. So it works really well in those situations. The other reason it works well, and sometimes it must work, is because, again, one of the first things I do when I start working with businesses is have a look at the pricing, the productivity, the efficiency of the business. And their pricing is often well undercharged. It can be inherited. I've seen it inherited from, this is what Dad used to do, the way Dad priced. And whilst prices might have gone up because materials have gone up, the pricing formula doesn't work anymore. It's the most common one is that's what everyone else is charging. That might be true, and it might actually work, but we don't know that that's the case for your business. So we've got to go back and check on that pricing. And often it's well undercharged. I think I said last week, I saw one recently where realistically the person was charging $135 an hour, and they should have been at least $185 an hour, even to be what was a standard pricing in the industry. So that's a big jump. But here's the good news about that. This is called a pricing matrix that I have. So it's a price margin matrix. And this one here is about increasing your prices and what has to have. So it shows, if we use the table, let's go along to if your present margin is 30%. So obviously you can't see this on a podcast, but it's a margin matrix, and it shows along the top, this is what your margin is. And then down the side, it says, here's your price increase. And it shows you in this table how much business you'd need to lose in order to just be back at the same profitability. What that means is you're increasing your prices. You might lose some customers, but you're making just as much money doing less work. That sounds good, doesn't it? If I just have a look at one, if your margin is 40% and you increase your price by 10%, you'd have to lose 20% of your business to be going backwards. I've done this with people. I've had a few clients over the years where we've actually decreased revenue for the year and increased profitability markedly. And so have a look at your pricing, whether it's an hourly rate, your cost of goods sold, whatever it is. Have a look at your productivity comes into that. Have a look at your efficiency. There's differences in what that means, particularly in mechanical businesses. Productivity can be as simple as, are you quoting the job's going to take a day, but as I said before, it takes 2? Well, your productivity, your efficiency is just blown out of the water with that. So in mechanical services, it can be that if a job's quoted to be 3 hours and you can do it in 2.5 hours, you're very efficient. Productive might mean, though, if you only do one of those a day, that's no good. So you've still got to be able to get through the stuff for the day. So have a look at increasing your prices. So there are 5 things for today. Collect your outstanding money. That's a really, really important thing to do. Have a look at the work that's been completed and make sure that gets invoiced out there. Have a look at the work that is near completion in your work in progress. What have you got to just finish that off so it can be invoiced out there? Take deposits. If you don't have them in place, put them in place and have a look at what your price needs to increase by. If you would like a copy of my pricing margin matrix, which has got increasing your prices and also what happens to you if you decrease your price. If you're on Spotify on the video at the moment, you'll see you email success@businessunlocked.com.au and just put pricing in the subject and I'll email you out the pricing margin matrix for you to have a look at. Thanks for joining me today. Look forward to talking with you again next week. So I'm going to be doing from now on a mixture of interviewing people and also taking you through some of the strategies, just me talking to you. Let me know what you would like to hear about and I will answer those questions for you. Thanks for joining me.